Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Dennis had a great title for today's show. It is a chip wreck. So that is what we're going to be leading with today. The chippers are down on this Huawei news that we've had over the weekend. So we'll talk about that. We'll talk about just tech in general getting hit this morning. And we have some interesting ratings to discuss. Not much in the way of earnings today, but we'll get some retailers reporting later in the week. Interestingly enough, all three of us did our own independent channel checks on Beyond Meat over the weekend, so maybe we'll talk about that. And our guest today, Greg Harmon, Dragonfly Capital Management. He'll join the show at 8:35. Joel, what's the word here overnight?
In the red here by 17 handles at 28.45. We had a spirited rally off the 6 o'clock open, got all the way to 28.76.50. Not much up there. Thursday's close was 78.50. Didn't see it. Pre-market low, 42.25. Our big number on the downside will be the low from Thursday at 28.40.5. You have crude in the green by 19 cents here at 63.11. Got as high as 63.96, knocking on the door at 64. Gold up $1.10, 1276.80. Silver not even up a penny, but up 0.7 cents at 1439.5. And don't look now, but Bitcoin challenging 8,000 once again. The futures up $822.50 at 79.70. Triple D, you said that the spoods weren't down enough, and that was about 4 or 5 handles ago. And, we're coming in now. What are you seeing?
Yeah, same thing. I mean, I just see everything destroyed, and then I look at the S&Ps. We're only down 12 handles. I'm like, what's up? So anyway, starting to catch up a little bit here. We're down 17 or 18 handles here now, so we're starting to fall. But, I mean, it's just you look under the hood, and it's not good here this morning. I mean, we know the Qs are down significantly, but Apple's down $5. Every single stock you look at, and like FANG is getting the beats. Google's down 1.1%. Amazon's down 19 points or 1%. I mean, everything is down, from a tech perspective, way more than the S&P is. We do have some stocks holding us up in the S&P. Oil is trading a little bit higher, so that's trying to help out a little bit here. But, you're scrambling to really find any stocks. I mean, your utilities, XLU's slightly in the green. That's just defensive again. Target is up and had an upgrade, but you're scrambling to find stocks that are in the green. So it looks like it's a mess here once again here this morning, Joel. This market continues to get bashed.
And I thought that we were going to have a lower open based on the Trump, ending Iran if they do anything again. So, but not. No, it was the exact opposite. Had a rally, off the open, a considerable rally at that, and then I wonder if China just knows when to tweet or when to make these statements because it was, just after the stocks opened and getting the headlines here at 4:30 in the morning, they come up, they tighten up real quickly and, make these negative comments and down goes the market. And we were unable to recover. So there we go. Then let's see what happens. We're coming up real quickly on Thursday's low at 40.50, 28.40.50. It's the next target on the downside.
I mean, the real wreckage here, though, is the chips. If you're looking at these things, they have been in the doghouse, and they continue to get hit here this morning. Give us the headline here, Spencer. What is the driver here today? Yet again, more bad news for the chips.
Yep, Huawei back on the U.S. trade blacklist, which limits who they can and can't do business with, essentially being cut off from U.S. markets. And Google is the first major domino to fall here. They suspended Huawei from their Android network. And Huawei is, of course, a major chip supplier. So it's kind of hitting the entire sector this morning. Good for companies like Nokia, but bad for every company that sort of relies on Huawei for supplies.
I mean, I'm just looking across the board here on these chips, and they are just getting hit hard. Micron is down 4% here this morning. You can jump over to the big guns. Nvidia is down almost 3%. AMD is trading down 2.5%. Applied Materials, their great earnings report is now gone. So selling rips once again works on these earnings. I mean, the ones that have been beating, the ones that have been in downtrends, when they're getting the pops, they're getting faded. And we know the chips have actually been taking a hit. Applied Materials popped up to almost $45 in that earnings report. It's trading down 3%, down at 41.40 here this morning. So again, we're just seeing, the same stocks, it seems like, leading us down. And that's been the chips for the last week. And it continues here this morning.
Yeah, taking a look at Apple here, trading down $5.25. They were a subject of China tariffs as well. For our Apple traders, our low of the move, since being over $200, was last Monday at 182.85. Currently trading 183.75. As I said, for Thursday's low, 40.25, we just went to 39.75 here. So see if we can get a bounce.
Free falling, yeah, sorry, I'm not trying to sing here this morning.
That's
Come on. It's your memory. You're starting to lose. They're starting to get Alzheimer's here, guys.
Whoa.
Okay, sorry, I take it back.
I want
dementia.
I want to stick on the Apple theme for a second because one of Apple's suppliers this morning has cut their guidance. Lumentum Holdings, LITE is the ticker. They lowered their preliminary Q4 guidance, or the adjusted EPS guidance at least, from the previous low end was 85 cents. Now it's 65 cents. Versus the analyst estimate at 92 cents. So they're lowering their EPS guidance by 20 cents here this morning. And their sales guidance was cut as well by $30 million, 405 to 375.
Find me some good news. I'm like, really, and Spinner, here's Spinner. He gave us a good little stat here. XLE yield is greater than the XLU yield now. What's up with that? I mean, you're going to buy these utilities to these kind. XLU is only yielding 3.07%. Joel, did you see that? Is that right? These defensive utility stocks, that's basically, you're in these things mostly for the dividend, there's almost no growth, is only yielding 3% now.
And what's the XLE?
It's yielding more on the oil stocks. Obviously, they've been going straight down, but 3.24%. So that's pretty crazy. Showing you how this market is completely playing defense. I mean, you look at all those utility stocks, and back in the summer, when the market decided to start buying stocks hand over fist again, we were making new lows on a lot of these utility stocks. Look back to DT Energy when it got under $95 back in June of 2018, back to, SO when it was challenged that $42 level multiple times, but it held. I mean, if you were just buying these defensive utility stocks back in the summer of 2018, when everybody was buying stocks, you'd be pretty happy now, because the stocks are really were actually down from where we were in the summer of 2018, just slightly, although we made that new high a couple of weeks ago. But the utility stocks have ripped. I mean, let's analyze this now. If you're coming in and playing defense now and buying stocks like Procter & Gamble and buying stocks like, that are utilities in the XLU and buying stocks like Coca-Cola, I mean, it's just so late to the party. If the trade war continues, they could continue to get bid, but what happens when we start to actually, get some good news coming back into this market? And these things, there's no growth. You're paying pretty high multiples for some of these consumer staple stocks. I mean, this Procter & Gamble at 107 makes no sense to me at all. When I looked at it back in, and these things can stay like this for a while, trying to steal your friend. But remember, we were talking back earlier 2018 when the thing got down to 80 and 75 and 70. It seems like those are the times that you buy these staples and you sit on them for a bit and eventually they come back. But wow, it's been an impressive rally here for the defensive stocks.
And just looking at this XLU, I mean, the common chatter, we're going to have not one, but two interest rate cuts by this year. I don't know. I just don't know here. This market's just giving a lot of, a lot of different signals here, but utilities here, this is an all-time high for the XLU. So, wow, trend is your friend here. I'm just looking at some of these DTE. They're all, I guess there really is a flight to safety here.
There is. The flight to safety is there. And we're seeing it again here this morning, but it's flight out of a lot of other stocks. And it's not just, the chips, and it's not just, I'm just looking, anything China is just really hit hard here this morning. Have you seen Alibaba? Baba's 165 now after their good earnings report. They've hit it down another 10 points. So they were coming in and hitting that pop too. Now we're breaking down, talking against my book because we know I still own some Alibaba in the long-term account. But holy cow, I mean, it went from 195 2 weeks ago, 2.5 weeks ago. Now it's 165. I mean, some of these stocks are really looking ugly.
They are, and also looking super ugly this morning, and ready to trade below 200 for the first time. And I'll have to go to the monthly charts here, but more bad news for Tesla. Dennis trading down $9.03.
So glad I'm out.
Yeah, boy, I am too. Let's see.
This Tesla is just broken. Jeremy Newsom, fantastic call on our show on Friday. The stock was 220, and he says, I could see this thing going to 180 in a hurry. Well, Jeremy Newsom, 20 or one trading day later, you're halfway there. So great call, buddy. If you're listening, I know you do listen to us sometimes. But wow, I mean, this story is broken. So there's revenue issues here happening now. I mean, this is just a stock that I said, that I kind of, thought it was a good story. And I sold it. Eventually, when we went through the 240 support, I was like, I got to get out. So I'll admit you're wrong and move on. I'm glad I ate the loss because I'd be down another 40 handles here right now. So it was a small position for me. But regardless, I made a call on. I thought it could hold up. I thought it would hold the 240 support. It did not. Story is breaking. So admit you're wrong and move on, and it saves you some money sometimes.
Tesla also had their price target at Wedbush lower this morning. They lowered it from 275 to 230, which I guess, okay, saying they studied concerned demand for the Model 3 in the U.S. So their price target is already well above where the stock's at. So
I mean, we're going to take out 200 here. It's 2 points away. Why wouldn't you hit the stops at 199? And then you start looking, you got to go a long ways out here, Joel, to find support. We are going back 1, 2, 3, back to 2016.
Yeah.
To find levels.
In December of 2016, you had a 180 low.
That's a nice level.
Yeah.
I think that's your minute. I think Jeremy Newsom is right. I think we are going to 180. And I think that's going to be the big test, because if you look back, we hit that in 2014, we hit that in 2015. Yes, we did breach it in 2016, just really quickly there back in February. We really shot down hard. But if you look, it's kind of had multiple bottoms there in that 175 to 180 area. So I think that's where we look like we want to head. What happens from there, though, who knows? I mean, we've always known the valuation has always been the issue on this stock. It just had a good story. And right now, when the story is broken, this is what happens. Money starts to come out of it. So you can have a good story. When the story starts to die off, or if you're in the worst case, when the revenue isn't coming in as much as maybe analysts projected, stocks with high valuations get hit hard.
Let me pick out the pre-market low here, and we got close. 201.01 is your pre-market low, and just about 80, 90 cents away from that. And as I mentioned, I mean, you could probably find some daily lows, under 200, but basis of monthly charts, 180. So take a look at Tesla here and see if you get a bounce. Speaking of a bounce, S&P futures have rebounded off Thursday's low. Thursday's low was 40.25. We got the 39.75, and now we're just a little bit on the rebound here. So may have missed the low of the day here a little bit.
It's hard to say that yet, because we've got a lot of stocks that are significantly down here in my filters. So I'm not going to jump out on the limb and say that this low of the day is in. I mean, I did see some bullish commentary. People were looking at patterns. We're not big pattern traders on this show, but they were talking about a inverse head and shoulders for the S&P. You can kind of see what they're talking about. You got the little left shoulder there from the 9th and the 10th. The head, if I'm looking at it in inverse, was on May 13th when we made that low at 279, and now we're trying to form the little bit of the right shoulder here. So, there's good points being made there.
I see that.
Yeah, I see it. So, I mean, as long as you don't breach the low, I mean, if you're playing that pattern, you think, okay, eventually they're just going to come back and buy the dip's going to rule once again, which it often does. I think, or if you think Trump's going to defend this market, which he probably will if we continue to go lower, I mean, 279.93 is your line in the sand. I would say you breach that if you're playing that pattern. So you give yourself, 5 points on the S&P. If you're playing it, breach that, then you want to get out. But I don't know. It's the kind of market where it's just so headline driven.
Yeah, just wait for a tweet. Just wait for a tweet.
Well, that's it. So you could open down through that. But technically speaking, if you're playing that pattern, I would not want to see it breach that 279.93 low on the SPY.
Right. So no earnings, right? No earnings.
Zero earnings here. And I mean, it is a holiday here in Canada, so I guess U.S. market's respecting that holiday, but not putting any earnings on our holiday in Canada. Victoria Day. See, I'm supposed to be relaxing actually here today, but I'm working just for you guys.
Wait, pardon my ignorance, but what is that?
Queen Victoria.
I'm asking because I don't know. I'm
Queen.
Okay.
I think it was her birthday.
Okay.
I should know that. I'm pretty sure it was her birthday. Anyways, it's Queen Victoria Day.
Oh, did we do our field test? Did we cover our field test in Beyond Meat yet? You mentioned that at the top of the show.
Yeah, no, let's talk Beyond Meat. So
talk about it. So independently of each other, without
we all did the taste test.
We all attempted at least to do some due diligence on the Beyond Meat product. I guess I'll just start because my story is the fastest. I went to a restaurant, attempted to order a Beyond Meat slider, and they were out. They were actually out. So bullish. Bullish is what my due diligence says.
Yeah, when they run out. And I had my first one on A&W, and it was pretty good. Joel, have you done the taste test before I get to my
I went to Whole Foods. I've been talking a lot. At least it's been on it's kind of coincidental. At least it's been on like a real vegan kick as of late. So, I mentioned this. So
perfect timing.
I went over to Whole Foods and I got 4 burgers and I figured I'd try the dogs or whatever, but it cost me 18 bones. So, I mean, I think you can
get 4 burgers and a couple dogs.
4 burgers and a couple dogs,
yeah.
But no, they're on the slate for tonight.
We'll have to hear what you think about the taste test then tomorrow. So I did a taste test over the weekend here too. Had a couple friends over just last night. So went to the grocery store, bought I was going to buy 8 burgers, but then I cheaped out because they were so expensive, the Beyond Meat ones. They were in 2 packs, and this is in Canada. 2-pack, $7.99, so $4 a burger, and they're not very big burgers. So I was like, So I only bought 6. I cheaped out and bought 6 of them. So we did the ultimate taste test because I actually fed it to the 4-year-old. So I wanted to see if he'd notice the difference. Spencer's always interested in, my 4-year-old in eating a burger. He mowed the burger right down. And so I put it down, didn't say anything, put it on his bun to see, what he thought. I took a bite. I was like, that's a pretty good burger, obviously knowing what it is. He didn't know. So he takes 1 bite, just puts the hamburger back down on his plate, opens up the top of the bun, takes the hamburger patty off of the bun, puts it to the side, and then proceeds to eat the bun with the ketchup and the lettuce and the tomato. So the taste test did not pass the 4-year-old test. The 4-year-old could tell that something was wrong with his hamburgers. So sorry, Beyond Meat. The ultimate test, the 4-year-old says that your burger doesn't taste like a burger.
Did he say anything?
Nothing. Just literally, I watched him. We're all watching. He takes a bite. It's like, no, calmly. No. Opens up the bun and takes the patty off, puts it to the side of his plate, and that was it. Never touched it again. I actually grabbed his patty afterwards and ate it myself. So I thought it was pretty good. It wasn't like, oh my goodness, this is the best burger I've ever had. But when you think of it as non-meat, I was pretty impressed. But like I said, the 4-year-old, not impressed with the Beyond Meat burger. So sorry. And I have more bad news for you other Beyond Meat shareholders, because there is a double top put in place, and it coincides with the retail buzz because Thursday night, Beyond Meat, BYND, had hit mainstream media. It was on, and I think we talked about the nightly news on, I believe, NBC, and they featured it. And typically when you see it hit mainstream media like that, it typically signifies a top. So with the 2 tops in place right now, I think rallies to be sold in Beyond Meat. And the 4-year-old test that I did, I'm saying Beyond Meat overvalued. This market's obviously not helping it here this morning because the stock's trading slightly down, but I don't like that double top in place. So I'm staying bearish Beyond Meat unless it takes out that 97 top. Talking 96.78.
what I'm gonna do when we make these burgers tonight, if I don't like it, man, I'll just get a couple slabs of bacon and throw it on there,
Well,
right?
bacon helps everything. You can't go wrong. And you know what? There's a good point there too. Oh no, it wouldn't have been an A&W, but it kind of defeats the purpose though, Joel. If you're trying to eat a
I mean,
vegan burger and then you throw a piece of bacon on it.
Hey, Dennis, I was just joking around here.
Oh, you know what? It would make it taste better though. Bacon makes everything taste good. You can put bacon on a boot, and the boot would taste pretty darn good.
Wait, Joel with a great point though. Beyond Meat did get Citron on Friday. Andrew Left came out.
He's got a 4-year-old that ate the burger.
Left came out on Friday, bearish Beyond Meat, essentially making the point that we were making a couple days ago, which is that just the valuation is greater than the value of the entire industry that they're in. So,
it's ridiculous.
It doesn't make sense. He noted that it's the most heavily traded retail stock on Robinhood. I'm not sure how he knows that, but that's very interesting.
I think CNBC said that too.
Okay, I didn't see that.
So, I think that is true.
Just something to be aware that.
Oh, it's ridiculous. The valuation, but it's a matter of how long the story stays hot. But it's already hit mainstream media. When it hits NBC like that, that signifies the top. It's probably not coincidental. Thursday night and Friday morning, we put in those same tops in the same area as everybody sees this and like, oh, I got to go buy this stock. It's usually the top. So I think the Beyond Meat top is in. If it takes out 97, then I was obviously wrong. And, my paper trade I would cover. I'm still not shorting it because I hate shorting these high flyers and these things are unpredictable. But I will say, I think when you look at Beyond Meat a year from now, I think it is significantly lower than $88. And I'll go as far to say it could even be lower than where it starts. What was the IPO price on this? Let's find out before I make a prediction on that. What was the actual underwritten price?
IPO price was, give me 1 second, $46. Nope.
I don't know if
I lied. $25.
$45.
46 was the open. 25 was the IPO price.
Okay, well, strike the 25, but I think it could challenge 45 to 50 this time, or within a year, we'll say. So that's my bearish rant on Beyond Meat. But I mean, story is still there. This bill, people go in the grocery store and paying $4 for a patty, but I'm thinking long term that this is way overvalued. And then once the story starts to die off, I think you'll start to see money come out of it.
All right, should we let's just do a quick look at these other darling IPOs here that as of late Lyft down $1.43 here. Did sneak down to 47.17. So this one is getting pulling back a little bit. Wow, you had this thing moves pretty good. You had a 10-point rally off that 47.17 low. So taking half of that takes you back into the 52 handle. So if Lyft is going to get a lift here, I think it will be right here at 52 and change. Uber, how is Uber doing here? Can't get over that 45, but a little bit of
the line in the sand.
Yeah. Yep. That had a rally off the 36 and change low. So
you just think like the psychology behind it. And you think about that. Everybody, that was the underwritten price was 45. So nobody in the primary market that held it into the actual, thinking that they're going to make a killing. Nobody has made money yet. They're all down. Everybody who bought this, obviously if you bought it, but everybody who got it at the underwritten price of $45, who got, shares, they were thinking they were lucky getting them from the broker, is down. All those people are looking to get their money back. So that's why it kissed on the first day, 45, couldn't get through it, got up even near it, 2 days ago, 44.06, and then 43.29. So it's difficult until you take those people out. So 45 is the line in the sand. The stock remains. Bears are in complete control until you can take out 45. That's what I'll say. Take out 45, then I get interested maybe in a trade. But until you take out 45, really hard to get bullish the stock.
Yeah, Jar making the point. I think some of the Uber drivers and
they all got shares too.
Yeah, they got shares.
They all think they're going to get rich on this thing, and they're all losing money on it. So, I mean, it's tough. It's tough. We saw this with the Facebook one too. Everybody started to get their allocations at the last minute, and that's when and Facebook obviously 38.42. They held it up 38 that day, but the next day it collapsed. We know it eventually got down to like $18. So I don't know. Valuation's always been an issue for all of these things. So I own none of them because.
Let's just look at Zoom too. Zoom made a new all-time high on Friday at 90.28.
We called that one.
Yeah.
That one on the Wednesday show. We called that when that was $79, saying this looks like it's going to go. So market's going down, Zoom's still going up. I mean, I was saying it on the Wednesday show could go to $100. I still think that's, possible. Not looking at valuations or anything there, but the technicals look fantastic still on this thing. So as opposed to some of these other ones that have put in a double top or, started drifting lower, the Zoom one still looks the best of them all, in my opinion.
Trading down just a tad here in the pre-market, down $1.18 at 88.80. So use that close 89.98, and the high was right there at 90.28. So there's some targets on the upside, considering that's trading down. I guess a little bit more than the market. I'm not sure much volume, but we've switched to Zoom, so that's good, right? We like it.
It's way better than Skype. It's not kicking us off. Quality's pretty good. I like this switches around when people are talking, and so I like it. I like the Zoom.
All right, we got about 3 minutes here for imbalances.
Let's look at Sprint and T-Mobile here, because
Sure.
Word on the street is that Sprint and T-Mobile, God, I can't believe the story's still a thing, but that
it's crazy how long the story's been going on.
They're going to announce I guess, revised merger today. They could announce it today. It wouldn't obviously be approved. It has to be approved by the SEC first, FCC, but that the word is that they're going to report that this merger is happening today and await on FCC approval.
I mean, this was rumored all last week, and now it still pops up. So buy on rumor, and they buy on news too. So it's up 10% here. So congratulations to whoever bought that on the rumor. I mean, you typically buy on rumor, sell on news. So I don't know if I would be chasing it up here 10% here this morning, because this was rumored last week, and it wasn't really popping that much on it. So obviously on the official, news or it's still just rumors, I guess, but it's getting a big pop here, 12%. But I'm not chasing this. This was rumored all last week.
Yeah, it's been going on. How long has this been going on for?
I feel like it's years.
Yeah, I feel like it's been like 2 years. I don't honestly know, but it's been a while.
I think you're right. I think it's probably been 2 years. Crazy.
This is a new all-time high for T-Mobile by a long shot here.
That's impressive, eh?
Yeah, that's a nice looking chart here. Trading up $4.13 at 79.5. The former all-time high was at 77.13, made on Friday. I'm not sure how much volume is associated with this, but yeah, big move here for T-Mobile, and Sprint's getting a lift too. But we'll see. We'll see if any news comes out on that today. Big moves and
all headlines. That's all going to be headline traded.
Yep, in a poor tape. We got about a minute and a half here before we.
Yeah, we'll bring up the imbalances and get them hot off the press here for you in a second. I mean, obviously, it's going to be a lot of sell imbalances here, but we'll see. The market continues to kind of leak. How far are we off the lows now? Real close.
Now we're back. We drifted back towards the lows. 39.75 is the low. 41.25 is where we're currently trading, down 21 handles. So that's where we're at. We're just skimming along the pre-market lows here. We'll see with imbalances in 1 minute.
Telecoms are definitely strong, like not only the T-Mobile and the Sprint, but AT&T is trading up 1%. Verizon's trading up 2% here this morning. So you're getting lifts across the board. If you are trading Verizon, always keep in mind when you get to the big hole numbers that you haven't been to for a while, they're probably going to run to some huge sellers. I'm going to the book right now because I bet you in Verizon at 60, the world is offered. Even at 59, there's 62,000 shares, but I'm going out to 60. 100,000 shares at 60, but that's significant enough to be probably a stopping point or at least a pausing point there. So it gets up there. I might try from the short side.
Okay. All right. And boy, it is a big move up $1.16.
Big move for Verizon.
Yeah. Well, just nothing else to buy right here. AT&T is trading up 35 cents over $32. I believe you have a gap in here that we're going to fill today, 31.88. I think that's when it went ex-dividend.
You wonder if it's the stuff at 32.
Yeah, and then it's
look at the book on this one too.
You there?
I'm going to look. JV Spec might beat me too. He's in the chat. Oh yeah, 280,000. That's significant. So if you're buying 32.15 right now, it's only trade 127. It's got to do another 150 to take that out. I mean, it might. It's trading pretty active volume right now, so it might. but I'd be a little bit cautious if I was chasing that this morning.
Okay. And
Imbalances, GE, always a sound balance, 215,000 shares. Alibaba, the Chinese stocks are all destroyed. We talked it already. 69,000 shares to sell. Seeing even some sell imbalances in some of the defensive names. Pfizer, 131,000 to sell. Procter Gamble, 42,000 to sell. Coke, 58,000 to sell. So that's not typical. Johnson Johnson, 32,000 to sell. I've got some trading positions on Johnson Johnson and Coke as well. Just overnight positions.
Jay is saying, and I have no idea where he got this from. Game of Thrones buzz post finale regarding tea. Do you?
Is that what it is? No, I don't think so, because he got all the telecoms up today.
No, there's no way.
I heard that finale was absolutely horrible.
No, it was not horrible.
What did you?
I don't watch Game of Thrones.
I watched it. I didn't hear anything. I watched it. What I
good?
I'm
Just
curious.
say good, but don't tell us anything about it in case we just watch the series sometime. But
I would say pretty good, not amazing. But the one thing I'll say is I eagerly await the next analyst note on this in like a month or so, with some sort of estimated data on the exodus of HBO subscriptions now that everyone's favorite show is over. I would be curious to see what kind of if how many people actually cancel their HBOs.
Is it
now.
Is it over for good?
It's over for good.
Really?
There's going to be a spinoff, but the main show is over for good.
How long was it on for?
8 years.
Really?
9 years. 8 seasons over 9 years. So,
Huh.
Yeah. Any more imbalances, Dennis, or we just had Johnson?
No, they're all to the sell side slightly. Nothing huge. Again, these days, don't be fooled that if they're not huge, that everything's going to change, because the institutions just don't put their orders out there early. They can't, because it's too thin. It's too wild a market, so they're being careful. Sprint 44,000 to buy. I mean, Sprint $7.24 now. 6.99. We just talked about it. Like, whew. That's, if you want to chase it. But I hate chasing stocks.
Sprint up $1.
I can't believe I actually thought about buying this. I mean, I had the headline last week, and I was like, well, that sounds pretty good. And I thought about buying. I actually did trade it a little bit on that headline. I think it was like Friday during the day some of that headline broke. Let's go back and look at the news. It was Thursday or Friday. Not this actual headline, but the rumors of this happening, that they were going to be, doing some revisions and going to be coming.
Yeah,
was it, Spencer?
It was. Actually, you know what? It may have been more than a week ago. Let me see.
Yeah, the 13th.
Yeah.
Well, yeah. Okay. The 13th.
Hearing 18
so last Monday.
Yeah, last Monday. And then they reiterated on Tuesday, and then
like I heard the asset sale, or the they were going to do some revisions. Yeah, like I'm looking here. Charles Gasparino was tweeting out that they're discussing merger conditions with the FCC, including rural build out. I don't know what the hell that means, but anyways, this was already out. This was out last week. Now that it's official, I guess they're really doing something here. They're ripping it, but man, I guess I should have bought that rumor.
Hey, let's take a look at Etsy. We get that coming out of the Google YouTube chat here, and
that stock doing? Holding up.
It filled a nice gap though, didn't it? Look at that. You had, I don't know if that was earnings back at the end of February. It's traded down 54 cents. If you're trading Etsy, I think it's...
That was me, actually. My sales.
Where?
I had it overnight, so I dumped it.
Oh, you did?
Yeah, I had it overnight. That's like, there was somebody else involved there, but a lot of my sales there.
Okay. I did not know that, but you need this thing to clear 64 and put it in the headlights there, put it in the rear view mirror. I mean, 64.13, 64.24, those are your highs from Thursday and Friday. We've backed off that area. So I think till you get back over 64 here, I think path of least resistance here for Etsy is lower. And then it's not a bad trading stock here on the low of the move.
I trade Etsy all the time.
Really?
But it has, because it moves nice. But when you see the market trading down, it's got a beta of about 2. So I'm just doing the stat. Our S&P is down 0.67, 0.7%. Etsy's usually down more than 1%. So you see a 62.24 bid, you got them. That's just stat arb.
Stat arb, 57, 56.94 is your low. 57.18 was the low the following day. So that's certainly some support that you don't want to see breached.
All right, 8:35. Let's take a quick break and grab our guest today, Greg Harmon from Dragonfly Capital Management. We'll be right back in a moment here with Greg. All right, welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, and Dennis Dick, joined now, as promised, by Greg Harmon from Dragonfly Capital Management. Greg, how's it going this morning?
It's going pretty good, guys. How you doing today?
We're doing okay here, getting some volatility overnight here, but I'm glad to get you on the show today. You always give us a balanced attack here, looking at longs and shorts here, and I guess we could start out looking at the U.S. dollar strong as of late. Are you looking on a macro basis here, technical basis? How you looking at the U.S. dollar?
Well, it starts with a technical basis where it's up at near 2-year highs and looking strong towards breaking out to new highs above that. But certainly you have to put that in the context of the macro background, right? With the strong dollar comes lower interest rates, which means the Fed may not even have to do anything if to please the market if the dollar keeps going up.
And where are you at on interest rates here? Are you looking for, I mean, I've seen a couple Fed funds rate factoring in 2 rate cuts by the end of the year. I mean, the economy, I guess, was looking okay here. I'm not sure how this whole China thing is going to play out here, but just talk U.S. interest rates here. Do you see 2 cuts in 2019?
Isn't it crazy that we went from 6 months ago thinking that we're going to raise interest rates again? To thinking that we needed a cut, to thinking that things were going to be stable, to thinking that we need 2 cuts. Pretty much nobody knows what the impact of any kind of a trade situation with China will be. Is what it turns out to. That's how I read the whole thing. If you just look at how U.S. companies are doing and how their earnings are coming out, yeah, they're tailing off a little bit compared to 2018, but there's still positive earnings growth. There doesn't seem to be a need to cut rates at this time. So I would be surprised if we're any different than we are right now at the end of the year in terms of short-term rates.
All right, S&P's making a new low on the session here at 28.37, down 24 handles. Greg, let's talk oil here. And you had a nice run to begin the year, and everyone, when it got up, close to $70, everyone was looking for 80 and 100, and now prolonged sell-off since the middle of April here. Kind of looks like we're just rounding into shape here, put in several lows, in the 61 handle and also under 61. Now trying to mount a rally here. What's your technical outlook for crude oil?
Yeah, I mean, I think you got it spot on there, Joel. We ran straight up to almost $67 and have pulled back, but we've in the pullback stayed over $60 and we stayed over the 200-day moving average, and now it's drifting back higher again. So it's looking like it's lifting out of a bull flag to me. So I would say 75, 76 probably on the next move if we can get back over the 67 high from April.
Let's talk
but
about
it looks strong to me.
let's look at that 200-day moving average, a popular trading vehicle for longer term investors and hedge funds, portfolio managers. How do you look at it? I mean, is it like the first time it comes down there, boom, are you buying it? Do you wait for a test of it a couple times? You wait for closes? You wait for a weekly basis? How do you incorporate the 200-day moving average into your trading?
Well, it's not a trigger for me. It's not a trade trigger, but it is an indication of the trend. And as long as we stay above the 200-day moving average after a move like we've had in oil from the December low, the trend is still have to see it as being to the upside. A break of that, then maybe it starts to get a little suspect. But it's one indicator. Yeah, combine it with some other things. Momentum indicators are also showing reversals back to the upside in oil, for example, at levels that remained bullish throughout the entire pullback. So it's more the broad picture than a specific trigger on one specific indicator.
All right, just going back to the equities markets, mixed. You said we're short term than long term. What do you say to the folks that are looking for another V bottom here? That was brought up on our show a little bit earlier. You had the left shoulder forming earlier in the month, and then the two lows under 2,800 or at 2,800 now, building a right shoulder here. What words of wisdom do you have for the people looking for yet another V bottom in the equities markets?
With what we saw Thursday and Friday last week, I see not so much of a great chance for that to happen just in a one-way fashion. Both of those candlesticks, if you look at the Japanese candlesticks for Thursday and Friday, both had long upper shadows, which is an indication that sellers were in control within the day. So it looks to me, and we're seeing it here Monday morning, that we're probably more likely to go back and retest 2,800 before we move back higher again.
All right, let's look at some individual issues here. First, taking a look at Costco. They report and a little bit later in the season being part of the retails here, but up at all-time highs here. I guess Walmart's not putting it out of business here. Down $1.07 in pre-market trading. Give us perhaps some targets here in Costco or areas where you might be a little concerned on the downside.
Yeah, I mean, certainly Costco is not having any issues. If you look at my basement, it's full of stuff from Costco. It was one of my top 10 picks last week, triggered but couldn't hold the trigger. So I look at it as being a solid buy over 248.50, but it hasn't been able to hold that on a daily basis. So it was almost a buy on Friday for me. But look at it relative to the market, and we've got the market pulling back the last couple of days, and it's holding up pretty well. So I think I think people want to stay in it, and people want to buy it.
Do you trim it like ahead of earnings reports, or put on any kind of hedge, or do you just kind of just ride it through the reports and then reevaluate the price action afterwards?
Well, there's a couple of things about that. This year, since December, I have been doing most of my activity in options, either close to the money options or back in December, more deep in the money options.
Mm-hmm.
And those I'm much more willing to ride through earnings without doing a whole lot to. What I might do is maybe roll the strikes up to take some profits out, but continue to participate in the upside. Longer term positions that I've had, where I own stock, I will put collars on. So that's buying downside put protection, either a put or a put spread, and then selling calls to the upside to help pay for that cost.
Okay, a little bit of trimming. Okay, let's take another look at another stock. Mickey D's, just hanging up here. Did we? I think we did touch 200 here. I'll have to go back and take a look. But Mickey D's, once again, strong stock here. Any upside targets? Yeah, you did sneak over 200. You had a 200 0.36 high. Give us some potential targets of areas of concern in Mickey D's.
Yeah, when I look at McDonald's, you look at back from the start of December last year into mid-March this year, it built a big symmetrical triangle. And that symmetrical triangle with a low of like 170 and a high of about 191 gives you a $21 price move out of that. And it came out at about 187. So $21 move takes you to like 208, 209, something like that. I own calls in this one. June 200 calls. I like that the momentum indicators have held up pretty well here as the market's been churning a bit, and now I'm seeing the Bollinger Bands, my preferred measure of volatility, starting to squeeze in, and that often happens before a stock starts to make a move. So maybe shortly this one will be ready.
All right.
We do have some breaking news here. FCC's Pay says he will recommend the T-Mobile Sprint approval. So you're seeing Sprint pop even more here on that headline right now. We're up 25% here now. So it looks like they might actually finally get this deal done. Have you been following this story, Greg? This T-Mobile Sprint saga for the last 2 years?
I'm aware of it, but and I've played T-Mobile a few times. T-Mobile's looking pretty good on this too. It's up about $4, $4.50.
Yeah, it's up 6% here now, new all-time highs. What are your thoughts here?
No, I haven't played it.
When and obviously, we get the T-Mobile, it's going to be the acquirer, I believe, in this case. Is this sometimes you actually see the acquirers go down, not in this case though. I guess the synergies are just strong enough that they wanted this deal to get done. With Sprint trading up 25% here now, it obviously looks like something good is going to happen here for this deal. What does this mean for the other telecoms? What does this mean for I see AT&T and Verizon actually lifting here as well on this. It seems to be lifting the entire sector.
I don't have any crystal ball on this one, but I can say
well, none of us do.
Consumer, I sit here and say, do you see on TV during sporting events? You see T-Mobile commercials and you see Sprint commercials. So these guys are like knocking the price down of everything by competing against each other. So if one of them gets taken out and there's no competition between the two of them, that's got to make less price competition for everyone in the marketplace.
What about from a technical perspective? I mean, a T-Mobile is hard to do because it's making new all-time highs, and Sprint's going to be on the merger. But like a stock like Verizon that's lifting $1.50 on this news, what are your technicals telling you just on a stock like VZ?
Well, Verizon had a really great back half of last year and has been kind of retrenching over the last couple of months now. It looked as if it was starting to lift out of that just starting at the end of last week. So, yeah, a move up here. Let's see, where is it right now?
59.60 up $1.51 here.
Yeah, 59.60. That's breaking out of a downtrend and solidly breaking into the churn area where it started drifting lower at the end of March. So yeah, if it can hold up here and close up here, it's a really good thing. And then over 61 would be new all-time highs and attract a lot of more buyers. The stock pays a pretty good dividend too.
Yeah, very good dividend. Let's go to some stocks here from the chat here. And Dunkin' Donuts, DNKN, they came out with some guidance here on May 2nd, and they hated it. They just had a tremendous haircut. Fell from 77 to under 73, now slowly working its way back up here. Any thoughts on Dunkin' Donuts?
Yeah, if you look at the entire range from the beginning of April through to now, it's all pretty much held either in the very upper end of the big consolidation zone that we had from September to December last year, or above that. So it's been pretty strong, and in a time where we've seen some turbulence. So I think it's a pretty safe stock to be in. I look at the momentum starting to turn to the upside now. Same thing as we talked about in I think it was oil that the Bollinger Bands were squeezing in. That was Costco. That was the Bollinger Bands were squeezing in, and it's right up against the top of those Bollinger Bands. This looks like it might be starting to trigger here. I would say over 76 is a buy.
All right. How about a tough one? How about UNH here, traded down $1.38? Had a decent earnings report. They took it out, whooped it, but now it's back above that level, trading down a tad here in the pre-market. When I look at this UNH here, and I just look at that major low that we had at 208.07. I'm just looking above like 243, 244. We got to 42.44 yesterday. To me, if we could clear that, then things really, really open up. I guess you got a bunch of daily highs up at 250 here, but looks like this one had the break, had the rally, consolidation, not a rally, consolidation again. What's your thoughts on UNH?
Yeah, UNH, I mean, I see here a series of lower highs since December.
True.
Yeah, we've got the December high, and then we've got the February, and we've got a bounce in March, and then a lower high in April, and then where we are right now at 240. So for me, it would take a move solidly over 250 to get me interested in this one.
All right, that's a good technical look on that. How about Target? And they're due to report here a little bit later in the quarter.
They're like Wednesday morning.
Yeah, they were the recipient of an upgrade here from Morgan Stanley, and just up 22 cents, which is pretty good relative strength here in the market. You do have someone trying to bring some stock in here at 70. Overall, not a great looking chart, but give us some positives and some negatives here on Target.
On the positive side, the stock is oversold.
Okay.
Momentum is deep right now, deeply oversold. So if it wants to get some buyers attracted, that's a good situation for it. On the negative side, it's been running a flat 200-day moving average all year. Back into November. It's coming off of a lower high. There's just like no strength right here, right now.
Yeah.
I said oversold, so that could be good. We had that gap down in November that got it to oversold as well, and it continued another $10 lower from there. So just because it's oversold doesn't mean it's a buy.
Okay, it's good. Good advice there. All right, I'm one more for you, and I'm done being easy on you, Greg. Tell me what your Bitcoin chart's telling you.
Bitcoin. I haven't looked at this since Friday.
Since Friday. Well, it's Monday, so come on, Greg. I always put you in the camp of like the longer term, trader. Friday it got whacked. Someone sold 35 million on Thursday night, and then
so we had that big run up April into mid-May where it touched 8,400, which that's like right the high from July last year. So it's a good area where you might expect some distribution to happen there. If you look at the full range from 2017 down, and then the bounce back up, we're now just starting to get into any kind of meaningful turnaround in Bitcoin from that point. If I put some Fibonacci's on it, we're close to 38.2% return from the $18,000, $19,000 top to the bottom. And what do I see here? Technically, I see some churning here between. It's a very big range, 7,250 and 8,300. $1,000 range. It's a pretty big place to churn, but so I would expect that it's going to take a while to get through that with a big range like that.
What are you doing June 20th? Are you going to be in New York City on June 20th for the Benzinga Trading Summit? I know you're out in Ohio, right?
I'm in Ohio. Yeah.
Yeah.
No, I think we're on vacation that week.
No, you can't be on vacation. You're taking your whole family to New York for the Benzinga Trading Summit? I mean, come on. They don't want to talk about the markets then, do they?
No, they probably don't want to. It might be difficult to get them off the beach.
Okay. All right. Thanks, Greg.
Okay, thanks, guys.
All right, 8:55 here. Joel, any updates?
Yeah. The
this
only
market?
updates is we just continue to go lower here. That's it.
There's just wasn't much helping. I mean, okay, the telecoms are helping a little bit, some of the defensive stocks, but there's stocks that are just getting hit hard here today. So we were talking about it early on the show. I mean, it's continued to leak since then because you look across the board and you see a lot of selling pressure in a lot of different sectors. I mean, even some of the defensive names are trading down here in the pre-market, but tech is really getting hit hard. The QQQs are down almost 1.7% now. It's almost 1% more than the S&P. S&P's trying to play catch up with it, but it's a little bit of carnage here. I mean, the chips, there's nothing uglier than the chips here this morning. They're all getting hit really hard here. But really, you look at anything in tech. I mean, Apple's got its own bad news here as well. There was a headline from Apple, and it's down $5.50 here. Can you give us that headline there, Spencer?
Yeah, the headline is they've essentially been threatened by China that China would increase tariffs on Apple products.
I mean, we got problems here. Apple, from a technical perspective, is starting to look a lot more broken here too. It needs to hold that low from 4 or 5 days ago, 182.85. We look like we're going to challenge that in the pre-market. What's it going to do there? If it takes that out, it's a slippery slope down to 170. Again, talking against my book because I'm long Apple in my long-term portfolio. I've been long it for a lot of years though, so I'm sticking with it. But wow, I mean, where we were 2 weeks ago on some of these stocks and where we are now, it's been an ugly fall. And you look at the S&Ps and it's held up pretty well. But man, when you look under the hood, you look at the chips and you look at NVIDIA and you look at what obviously Intel was the leader, which it was the one that fell first. But I mean, just across the board on tech, there's been a lot of stocks really hit hard.
Taking a look at the trade desk for William Lay, it had the post earnings bounce there from 173.60 all the way to 209.39, but now we're leaking. So William, I think the 50% retracement of that comes in right at like 191, 192 level. So no daily low to support it, being a level, but 184.76. But keep an eye on that. Just a nice bounce off the 177.85 low, but big fade. Let's see if it takes back half of that move. We got 3 minutes and 2.5 minutes here to cover some ratings here, Spencer. And we talked about the Tesla price cut. What else would you like to cover?
A lot. I feel like Morgan Stanley just woke up this morning because there was a lot of stuff coming out of Morgan Stanley. The biggest one is on the airliners this morning. So I'll just give you their calls here. Morgan Stanley is downgrading American Airlines to underweight. They're upgrading United Airlines to overweight. They're downgrading Delta to neutral. And I think that's all I got. Then they're maintaining their overweight on Alaska and maintaining their neutral on Allegiant. So, okay, recap, upgrade American, downgrade American, upgrade United, downgrade Delta.
Don't all the stocks the same sector go the same way?
You see a little bit of deviation. Well, you do see some deviation. We were talking about this a while ago. I mean, lately they are starting to all go the same way. But like we talked about Spirit Air for a long time there. I don't know what they were, but they were one of the strongest ones last year, going from $35 up to $65, basically doubling from the summer. And you saw other ones like LUV that really went nowhere in that time. So it's interesting. The beta's coming to play here because LUV is much more conservative, more defensive of the two. I mean, now you're looking at SAV back at 47, and LUV is kind of in the same place it was. So some of them don't move that much. So you got to know which ones move more than others. But Delta, UAL, overall, they do obviously correlate. They're all airlines, but it's funny. You look at oil stocks, there's, you'll see a lot more correlation. Sometimes you'd see, this oil's trading up, airlines go down. That's kind of decoupled there too, to a certain extent. You're not seeing as clean of a relationship as you have in the past. So it's tricky to pair trade these airlines.
Yeah, they definitely go in different directions. All right, well, we're going to wrap things up here. The S&Ps are off the low of the session as we speak. 28.36 is your pre-market low, trying to get back in the 28.40 handle. So as always, be looking to see a test and a hold of the pre-market low for a rally up. Underneath that, Not much, folks. You could call Wednesday's low at 28.15 your next daily level to lean on. So we'll keep an eye on that. On the upside here, I mean, you could blink your eye and this thing could be back at the 28.56 and a quarter. That's just above your low from Friday at 52.5. So we're down, but not out here. We'll see.
What's holding up? And obviously there's going to be some sectors with the S&P. Up more, we're not saying it's up, but it's a % difference here. So we know the Nasdaq's weighing down, S&P as well, obviously, with all the tech components in the S&P. There's going to be some stock sectors that are up. We already talked telecoms there. I wonder, you're going to see some of the defensive names. McDonald's just went green. So Philip Morris is trading in the green. So you are going to see some rotation here today. It's definitely scared of tech. That's where kind of the carnage is. Definitely scared of China. But I wouldn't be surprised if we see some rotation. What's kind of sneaky holding up here a little bit is the banks. They're down, and they're going to be down, but typically they move down lately about twice as much as the S&P. And you're not seeing that this morning. The TLT is barely up. So just keep that in mind if you're coming in here and buying utilities strong here this morning. Yes, the utilities are slightly trading in the green, but just be careful we don't see some funny rotation here happen too. So just caution to those who just, scrambling around, just buying all these defensive names here again. It's like I said, I am seeing a few imbalances in these things too. Not saying, that these are going to turn around and start going heavy red because we know they play defense on days like this, but I'm not seeing really that move that's really, as I'm saying, I've seen other stocks fall here. So trying to trade at the same time, losing my train of thought.
All right. Well, defensive stocks too. You did mention there because of but Trump saying we're gonna take out Iran, so maybe your defensive stocks will get a little bit a boost. All right, Spencer, 9:01. You want to wrap things up? Preview Tuesday show.
Before we do that, how was your webinar with Jeremy on Saturday?
We had a fantastic turnout. We had over 80 people at the webinar, and Jeremy he talked his gap trading. People took a lot of notes, had a lot of good questions and gap ups and gaps down. So that was a lot of fun. It's also fun talking, it's a little different talking about the markets when they're closed. Your eyes are not glued on the price action, but great turnout for that. And
great to hear.
And I think that I think there should be a tape of it rolling around somewhere. I'll check with Neil.
All right. If you haven't checked out the Benzinga Trading Summit yet, I highly encourage it. I honestly don't know of another event that is getting this many traders in the same room specifically for the purpose of just walking through their strategies at length. And that'll be happening at the Benzinga Trading Summit. If you want to learn more, go to bzprofit.com. I've got 2 promo codes for you, all capital letters. PMP50 gets you 50% off any ticket. I don't know if there are any of those promos still available. If not, PMP15, again, all caps, will get you 15% off any ticket, including tickets to the exclusive trading lounge where, as I mentioned, Joel and Dennis and others will be walking through their strategies at length. So June 20th in New York City is the Benzinga Trading Summit. Thanks to our guest today, Greg Harmon. Thanks to all of you in our chats. Please remember that all the information on our show is for informational purposes only and not meant to be investing advice. Hope you all had a good weekend, and we will see you again on Tuesday.